Right, let's get straight to it. No fluff. Everyone's sitting there, staring at their portfolio, wondering why their tech stocks are getting battered, while some other random thing's flying. Morgan, mate, you're the chart guru. What is the actual, the professional framework for knowing when to jump ship?
It's called asset rotation, you donut, and it's not random. It's
Right.
the difference between the pros and the punters. Think of your portfolio like a football team.
Okay.
You got your strikers, your flashy tech stocks, your crypto.
The ones that actually score you goals, you mean?
Yeah, when they're on form. But you've also got your defenders, your boring bonds, your utility stocks. The stuff that stops you from getting absolutely thumped when the other team is all over you. Asset rotation is just the gaffer's strategy.
Right.
You don't play 4-3-3 for 90 minutes if you're getting hammered. You make subs, you change formation.
Okay, I like that. So who's the gaffer? Me? And what am I looking at? The weather?
No,
The fat bloke in the third row yelling nonsense?
you're looking at the economic cycle, which is just a fancy way of saying the four market seasons.
Okay.
You've got the recovery, the boom, the slowdown, and the recession. Now, this is proper CMT level 3 stuff, but it's street smart when you boil it down.
Break it down for me. No textbook jargon.
Simple. Season 1, recovery. The economy's just been in the bin, interest rates are low, everyone's miserable.
Right.
This is when you buy the stuff that got hammered the hardest but has the most to gain. Tech stocks, consumer stuff like hotels and airlines, your strikers.
My crypto bags, basically. The buy the blood phase. Got it.
Exactly. Season 2, the boom. Now everyone's happy, inflation is picking up, factories are working overtime.
Okay.
This is when you rotate into the gritty stuff. Energy, materials, industrial companies, the ones actually digging stuff out of the ground or building things.
So when the price of a tin of beans goes up,
Yeah?
you buy the company that makes the tin. Clever. What's next when the party ends?
Season 3, the slowdown. Party's over. The central bank has hiked rates to kill the inflation.
Right.
This is where you get defensive. You sell your strikers, and you buy the stuff people need even when they're skint. Tesco, Johnson & Johnson, toothpaste, and bog roll stocks. You bring on the defenders.
And the fourth season, the absolute apocalypse?
Season 4, recession. Everything's on fire. Now your best player is the one that was sitting on the bench all game.
Who?
Long-term government bonds. Because everyone expects the central bank to slash interest rates to save the day. And that makes bond prices rocket.
Bonds. Wow. The sheer unadulterated thrill. So you're telling me the big secret of the mega rich is to buy bonds?
Yeah.
Your nan buys bonds, Morgan.
Your nan is smarter than you because she's not getting wiped out 90% on some dog coin. Look, the trick isn't just knowing the seasons.
Right.
It's knowing when the weather is about to turn. And for that, you use one simple tool, relative strength.
Okay, now you're talking my language, charts. Is this like RSI or MACD?
Even simpler. You take the thing you own, say the tech ETF, QQQ, and you divide it by the whole market, the S&P 500.
Okay.
You get a single line on a chart. If that line is going up, tech is your star player. It's outperforming. Keep it on the pitch.
Right.
The second that line starts trending down, it means tech is getting tired. It's losing its lead.
Ah.
That's your signal. Time to sub it out.
So it's not about if my stock is going up.
No!
It's about if it's going up faster than everything else.
Now you're getting it. It's all relative, man. Why would you have your money in an asset that's lagging the market? That's dead money. We do the same in crypto.
Yeah.
When Bitcoin dominance starts falling, what happens?
Alt season, the money pours out of Bitcoin and into everything else looking for a quick 10x. It's a massive rotation. And when the market gets scary, everyone rotates back. Not just to Bitcoin,
Right?
but all the way out to stablecoins, which is basically your version of cash.
See, it's the same game, just a different pitch. The principles are universal. Your stablecoin is my US dollar.
Wow.
Your alt season is my rotation into emerging markets.
All right, let's use a proper example then. Walk me through the 2022 carnage. Because a lot of people, myself included, got absolutely steamrolled. How would this, framework have saved my bacon?
Mate, 2022 was a textbook play, a thing of beauty. All through 2021, tech was the only game in town.
Yep.
The relative strength chart of tech versus the S&P 500 was a rocket ship.
Don't remind me. I was a genius for a year.
We all were. But in late 2021, the vibe changed. The Fed started using the I word, inflation, and they started talking about raising interest rates. And what does the bond market do? It front-runs them. Bond yields started climbing fast.
Right.
That was the first red flag. For a chart guy, that's a massive siren going off.
Why? What have bonds got to do with my tech stocks?
Everything. High-growth tech companies are valued on profits they might make years in the future. When interest rates are zero, those future profits are worth a lot today. But when interest rates go up to 5%, their future value gets discounted to hell. Higher yields are poison for growth stocks. And at that exact moment, the relative strength chart of tech started to roll over and nosedive. That was your final signal. Get out.
So the signal wasn't sell everything.
It was sell tech.
Where did the money rotate to?
Where does money go when inflation is the big story? Energy, oil.
Right.
The relative strength chart of the energy ETF XLE versus the S&P went vertical. So the play was simple. Sell QQQ, buy XLE. You would have sidestepped the 30% crash in tech and rode the 60% pump in energy.
Wow.
You literally rotated from the worst player on the pitch to the best player.
And crypto got nuked because it was the furthest thing out on the risk branch?
The ultimate striker with no defenders in sight. When the gaffer calls everyone back to defend,
Yeah.
your striker is the first one to be left isolated and useless.
You've nailed it.
The liquidity just evaporated. The smart rotation was out of everything risky. Tech, crypto, all of it.
Right.
And into the US dollar and defensive, inflation-proof assets like energy.
Okay, that makes a painful amount of sense. So let's bring it to today. What are the charts telling you now? Oh, wise one. What season are we in?
That's the big debate, isn't it? It's messy. You've got big tech, the Magnificent Seven, showing massive relative strength again.
Yeah.
But then you've got gold and Bitcoin, which some people see as a safe haven, others as risk on. They're also outperforming. That's not normal.
Yeah, what's with that? Gold and Bitcoin ripping together is weird. One's a 5,000-year-old rock and the other's magic internet money.
Right?
They're not supposed to be on the same team.
It tells you the market is confused. Some people are betting on a soft landing and more growth, so they're piling into tech. Others are worried the whole thing is built on a mountain of debt and the system's about to break, so they're piling into gold and Bitcoin as an exit. There's no clear leadership from the defensive sectors yet, but we're watching them like a hawk.
So the play is to watch those relative strength lines. If we see money start to flow out of NVIDIA and Apple and sneak into Johnson & Johnson and Coca-Cola, that's the tell. The big boys are quietly subbing on their defenders.
That's the tell. Forget the headlines and the noise. Watch the charts. Is financials outperforming? Is healthcare waking up? Is transport falling off a cliff? The market tells you its game plan before the news does. Your job is just to listen and rotate accordingly.
Okay.
Don't be loyal to your players. Be loyal to the scoreboard.
Solid advice. All right, that's enough of your TradFi wisdom. It's making my head spin. For everyone listening, if you want to get in on this chat, argue with Morgan about bonds, or show me your latest 100x gem, the link to our chat group is down below. Sign up with the CEX ref link to say thanks, hop in, and have a laugh with us.
Yeah, come tell Chris his bags are going to zero.
Oi, cheeky. All right, we're out. Now, here's a question we'd like you to think about. Given the weirdness of gold and Bitcoin moving together, what does that tell you about what the market is really scared of?
Ooh, good one.
Is it inflation, a recession, or something entirely else? Drop your thoughts in the comments.